On January 24, 2025, President Donald Trump signed a landmark executive order on cryptocurrency. This order marks a significant shift in U.S. policy towards digital assets. It aims to establish clear regulatory guidelines for the industry. The executive order outlines several key initiatives. One of the main goals is to create a working group on digital assets. This group will be tasked with reviewing existing regulations. They will also identify potential risks and benefits of cryptocurrencies. The order also directs federal agencies to submit recommendations for a comprehensive regulatory framework. This framework will address various aspects of the crypto ecosystem, including investor protection and market integrity. Another notable aspect of the executive order is its focus on exploring a national cryptocurrency. This aligns with Trump's previous statements about the potential of a digital dollar. The order instructs the Treasury Department to assess the feasibility and implications of creating a central bank digital currency, or CBDC. This move reflects the growing interest in CBDCs globally. The executive order represents a significant step towards providing regulatory clarity for the crypto industry. It signals a growing recognition of digital assets as a significant part of the financial landscape. The order's emphasis on both regulation and innovation suggests a balanced approach to fostering the growth of the crypto sector in the United States. Donald Trump's relationship with cryptocurrency has been complex and evolving. In the early days of Bitcoin, he expressed skepticism about digital currencies. He even called Bitcoin a scam in 2019. However, his views appear to have shifted in recent years. This is evident in his recent actions and statements. In a surprising move, just days before signing the executive order, Trump launched his own meme coin, Dollar Trump. This move, while unexpected, highlights his growing interest in the crypto space. This venture into the world of meme coins suggests a willingness to engage with even the more speculative aspects of the crypto market. Furthermore, Trump, alongside his sons, established Liberty Financial. This new venture focuses on selling NFTs and investing in cryptocurrencies. This further demonstrates his increasing involvement in the digital asset space. It also reflects a growing acceptance of cryptocurrencies as a legitimate investment vehicle. Trump's evolving stance on cryptocurrency mirrors the broader shift in perception towards digital assets. What was once seen as a niche technology associated with illicit activities is now being embraced by mainstream investors and institutions. The Securities and Exchange Commission, or SEC, has also made significant changes in its approach to crypto regulation. These changes signal a more favorable stance towards the industry. The SEC, under previous leadership, had taken a more cautious approach, often categorizing cryptocurrencies as securities. In a significant move, the SEC revoked guidance that required companies to account for digital assets held for others as liabilities. This change simplifies accounting practices for crypto businesses. It also reflects a growing understanding of the unique characteristics of digital assets. Further demonstrating its commitment to fostering innovation in the crypto space, the SEC launched a crypto task force. This task force, led by Commissioner Hester Peirce, also known as Crypto Mom, aims to develop a sensible regulatory path for the industry. This move suggests a more collaborative approach to regulation, working with industry players to establish clear and workable guidelines. The SEC's shift in approach can be attributed to several factors. One factor is the increasing maturity of the crypto market and the growing institutional adoption of digital assets. Another factor is the recognition that overregulation could stifle innovation and drive businesses away from the United States. The crypto industry has responded positively to Trump's executive order and the SEC's recent moves. Industry leaders view these developments as positive steps towards providing much-needed regulatory clarity. This clarity is seen as essential for the continued growth and mainstream adoption of cryptocurrencies. Brian Moynihan, CEO of Bank of America, expressed optimism about the potential for banks to play a more active role in crypto payments with clearer regulations in place. This suggests that traditional financial institutions are increasingly open to embracing digital assets, particularly within a well-defined regulatory framework. Coinbase CEO Brian Armstrong believes that clear legislation will attract more investment to the U.S. crypto industry. This highlights the importance of a supportive regulatory environment in fostering innovation and attracting capital. A well-regulated market is seen as crucial for attracting institutional investors and driving mainstream adoption. Binance CEO Richard Teng predicted that clearer regulation would lead to a new all-time high in the crypto market. This optimistic outlook reflects the belief that regulatory certainty will remove a significant barrier to entry for many investors who have been hesitant to enter the market due to its uncertain regulatory landscape. The positive sentiment surrounding the executive order and the SEC's actions has been reflected in the crypto market. Bitcoin, the largest cryptocurrency by market capitalization, saw a significant price surge following the news. This price movement is seen as an indicator of renewed investor confidence in the future of cryptocurrencies. Bitcoin's price jumped almost 4% on the morning of January 25th, reaching $105,423. This rally suggests that market participants view the recent developments as positive catalysts for the industry. The price surge can be attributed to several factors, including increased institutional interest. Clearer regulation is likely to attract more institutional investors who have been waiting on the sidelines due to regulatory uncertainty. Reduced regulatory risk is another factor. The executive order and the SEC's actions provide more certainty for businesses operating in the crypto space, reducing the perceived risk of investing in digital assets. Positive media coverage also played a role. The news of Trump's executive order and the SEC's policy shift generated positive media coverage, further boosting public awareness and interest in cryptocurrencies. The executive order and the SEC's recent actions mark a turning point for the crypto industry. However, the path ahead is still being charted. There are several potential developments that could shape the future of the industry. CBDC development is one area to watch. The executive order's directive to explore a national cryptocurrency could lead to the development of a US CBDC. This would have significant implications for the financial system and the role of private cryptocurrencies. Stablecoin regulation is another area of focus. Stablecoins, which are pegged to the value of fiat currencies, are likely to face increased regulatory scrutiny. DeFi regulation is also on the horizon. Decentralized finance, or DeFi, which aims to create a financial system that operates without intermediaries, is another area where regulators are likely to focus their attention. The regulatory landscape for cryptocurrencies is constantly evolving. The recent developments in the United States with Trump's executive order and the SEC's policy shift represent a significant step towards providing clarity and fostering innovation. However, the journey is far from over. The coming months and years will be crucial in determining the long-term impact of these changes. The industry will need to adapt to new regulations and work collaboratively with policymakers to shape a balanced and effective regulatory framework. The future of cryptocurrencies depends on navigating these uncertain waters and striking a balance between innovation and regulation.